Welcome. My name is Robin Miller, and I'm with the Pro Bono Partnership of Atlanta, and thank you for joining us today. Before we get started, there's a couple things I want to take care of. First, I want to thank Georgia Legal Services and Mike Monahan for hosting these series of webinars that we're going to be presenting beginning today and going on a monthly basis throughout the year. I also want to mention that we have a seminar coming up next week at DLA Piper, which is a law firm in town, in Midtown. And it's an exciting seminar that's being conducted actually around the country. And it involves dealing with the current economic climate for nonprofit organizations. The topics are great for a lot of nonprofits and what they're facing today, including dealing with employees and the legal do's and don'ts of reducing your labor cost. Also, contracts and how to modify contracts and save funds. And then the IRS implications of doing alternative fundraising methods. So it's going to be a great seminar. If you can make it, it's next Tuesday at One Atlantic Center, and it begins at 10:30 and it ends about 3:30. And you can register by email to registeratlanta@dlapiper.com. Or you can call us at Pro Bono Partnership of Atlanta and ask for more information. With that, I'm going to get to my presentation. And that is Charitable Solicitation, Registering, Acknowledging, and Substantiating Donations. This topic is one that the devil is really in the details on. We're going to talk through a lot of details, but if you have further questions, don't hesitate to email or call us. The agenda for today, which is on page 2 of your presentation materials that you have, I'm going to go over very briefly. First, we're going to talk about actually registering to solicit donations, and that is, what is it, what is registering, why do you register, and where would you register? Then I'm going to talk about internet donations and registration, because the internet has thrown a huge wrench into the whole idea of registration, because the internet is so accessible. Thereafter, I'm going to talk about acknowledging donations, because a lot of people think, oh, you just have to send a little receipt and it's no big deal, but there's a lot of specific guidance about acknowledging donations that you really do have to be careful about. After that, we're going to talk specifically about quid pro quo donations, and that's where the charity gives something back to the donor, and what there are more specific regulations and rules about how you acknowledge those types of donations. So we're going to spend a little bit of time on that. I also want to talk about corporate sponsorship, because making sure that it is truly a corporate sponsor and the money that you're receiving is truly a donation as opposed to advertising is important. And then how you acknowledge that donation is also important, and that's really why that's pieced into this whole presentation. And then finally, I want to spend just a few minutes talking about paperwork and substantiation and making sure you have the right things in your files in case the IRS or state of Georgia or any other state comes calling looking for information. So with that, if you'll turn to page 3 of the presentation, we're going to talk about registering in the state of Georgia. Georgia has it's called their Charitable Solicitations Act. It is at 4317, 1 through 23. And the purpose of the act is really to avoid fraud on the people of Georgia. Fraud is a huge issue, particularly in the solicitation area. A lot of people will make calls and do other things to obtain money, and they're not really a charitable organization, or they're not who they say they are. And it's an issue throughout the country, and so most states have charitable solicitation acts that address these issues. And basically, it's the state saying, okay, we want to know who's doing business in our state and what kind of charities are asking for money and how, so that we can make sure that we only have legitimate charities asking for money. So who must register? Well, charitable organizations obviously need to register, but it's charitable organizations who solicit funds in the state of Georgia. And they have to file a Form C-100. Now, you have to be, if you are an organization that exists in the state of Georgia, in other words, you're a Georgia nonprofit corporation or a Georgia LLC, then you need to file within the state because your principal place of business is here in Georgia. The Form C-100, which you can see there's a website on the slide that gets you to that form, and you can fill out that form. The form is 5 pages, but it doesn't really ask for a lot of information. It's pretty simple to fill out, but you will need to include your officers and directors' names and addresses, and the executive director has a higher burden, and they do need to complete a variety of information, including answering some questions. So in addition to that piece of filling out the form, you also have to file financial statements, and those vary. If you're an organization that has $1 million or more of income, then you have to submit audited financial statements. If you're between $500,000 and $1 million, then you submit what's called a review completed by an accountant. And if you're below $500,000, then you can simply submit some financial statements that you might have. In addition, you also have to file your Form 990 or your Form 990EZ and your determination letter that you receive from the IRS. Other folks that may have to register would include a paid solicitor. What is a paid solicitor? A paid solicitor is somebody who a charity pays to solicit donations for them. And that person can actually collect donations. But it's not that simple. The solicitor has to meet certain requirements under the law. They have to have a written contract with the charity, and it has to say in that contract the amount of compensation that they'll receive, and it can be derived from a formula, or it can be a percentage of gross revenues that they bring in, but it has to be clearly stated. In addition, they have to file a bond or a deposit with the state to make sure that they're on the up and up, and that the state can find them and retain monies that may have been taken from a charity. One key thing to note is that an officer, an employee, or a volunteer of a charity is not considered a paid solicitor. That is part of the charitable filing and is not a paid solicitor. A paid solicitor is somebody outside the organization who gets paid to solicit. Next is the solicitor's agent. The solicitor's agent is basically somebody who usually works for a paid solicitor, and they want to identify those folks as well, and that they need to register as well. Fundraising counsel. Fundraising counsel is a person I think of as the strategist. That's the person who puts together, they get paid, and they put together a program or a plan to manage your fundraising drive. They come up with materials and other things as to how you should go about fundraising, but they don't actually do the soliciting. They don't actually collect the money for you. But they also need to register. And again, an officer, employee, or volunteer of your organization would not be considered fundraising counsel. It's somebody who gets paid by your organization to do just that work. The next thing I want to touch on is the commercial coventure activities. Now, the commercial coventure does not have to actually register with the state, but it's important to understand what a commercial coventure is and what you are required to do as a charity in connection with this relationship. You have to have a contract. A commercial Chick-fil-A, in the course of a week, they're going to donate X percentage of their revenues to the charity. That is a co-venture between the charity and Chick-fil-A, or this one particular store of Chick-fil-A. In that situation, you have to have a written contract. The Secretary of State time, you don't actually file it with the keep it on file, and what needs contract. You have to state goods and services that are being offered, and I'm going to use a different example because I think it's easier. The Gap decides that they're going to sell or statement on it that's an organization, and the gross revenue from those t-shirts go to your organization. By the way, it has to be based on gross revenue, not on net revenue. Net revenue is not from the rest, it needs to be gross. So you have to identify the goods or services being offered. In this case, it would be the t-shirts. Then you also have to say the geographic area where they're being sold and the beginning and end date of the sales promotion. It's called a charitable sales promotion. And in addition, you have to have in the contract how the charity's name is going to be identified, and what benefit the charity is getting also has to be clearly identified, whether it's 5 cents per shirt or $1 per shirt or 5% of the gross revenues of the sale of the shirts. That all has to be clearly stated in the contract. In addition, if there's an applicable maximum dollar amount that the charity can receive, that needs to be listed in the contract. You also have to have a provision of accounting. You have to actually account for and have a method in which that coventure is going to tell the charity how much money they made and how many shirts they sold and when they're going to provide the money to the charity and the date of providing that money to the charity. And you also have to point out that this contract falls under the rules of this Charitable Solicitations Act of the state of Georgia. So it's a little bit more complicated than most people think, and these coventure activities go on all the time, and most people don't have these contracts, and they really need to have these contracts, especially in economic difficult times, because the government's going to be more likely to look at these relationships and make sure it's not some kind of way to defraud the public. Turning now to slide 4, we're going to continue talking about registering in Georgia. There are some exemptions to registering, and they're located at Section 9 of the Act. The one I want to point out is that if you don't have a paid solicitor, and in the current year and the previous year combined, you don't have income of $25,000, then you don't need to register in the state of Georgia. Okay, now assuming you do have to register, how often do you have to register? Well, for charities, you have to register every 24 months. And every 24 months, you have to complete the form and send in your financials and your Form 990 or 990EZ. Now, for all the others, the paid solicitor, the fundraising counsel, the solicitor agent, they all have to file on a yearly basis by December 31st. What are the fees for registering, which is always a concern to everybody? For charities, it's $35 for your initial registration, and there's actually a typo in the presentation. It should be $20 for your renewal. Paid solicitors have to pay a lot more because they're doing something that is far more likely, not necessarily will be, but has a greater chance of being something that's fraudulent. So they have to pay $250 initially and $100 on renewal. The solicitor agent pays $50 to apply and then $50 for renewal. Now if you'll turn to page 5 of the materials, we're going to talk about what acts are prohibited. And I want to generally say that this goes back to this whole idea of fraud and that you don't want to defraud the public. So there's a whole list of different issues here. Things like not making misleading statements to the state or to actually any person that lives within the state of Georgia. Making sure that you're not identifying people or companies as sponsors who haven't actually given you permission to state that they're sponsors. Not giving false percentages. So let's say your gross revenue percentage that you list out there is 5%, but in the end they don't sell as many and they want to recoup their costs, so they only give 2%. You can't do that. And not having that written agreement with the coventure and any other kind of device or scheme to defraud. All of those are prohibited. And the penalties can be pretty significant. It's $2,500 for a single violation, and up to a maximum of $25,000 for multiple violations in a single charitable solicitation. So if you have multiple solicitations, that can raise an increase pretty significantly, pretty quickly. You can also, if it's a really bad situation, have criminal penalties against you individually, and the charity can basically be put into receivership, and all of the monies can be distributed out. So it's important to register and do it the right way so that you don't run into any of these issues. If you'll now turn to page 6 of the presentation materials, we're going to talk about registering in other states. And when do you need to register in other states? Well, each state, unfortunately, has its own law. The nature of this is that it's each state trying to protect its citizens and how people do business within their state. And that's a very much of a state-by-state issue. So there isn't one big federal law that you can follow. However, that said, the National Association of State Charity Officials got together and created a unified registration statement. And some states have adopted it and some states haven't. And we'll talk about that a little bit more. But if you go to www.multistatefiling.org, which is on your slide, you can find the multi-state filing form. And it's an alternative to filing a form in each state in which you're doing business. And we're going to talk more about when you're doing business in other states in a few minutes. Some states do require additional information beyond the form, but all that information is right there on that website. That website is very user-friendly. And if you're thinking about doing charitable activities or solicitation in other states, it's a good website to go to see what the requirements are, because some states actually have monetary requirements that are much larger. Like Florida has a $200 requirement. And so it's much more significant. So you may want to look carefully at some of those areas before you jump in and start soliciting in those states. If you'll turn to the next slide, at page 7, this gives you a map from that unified registration requirement, or unified registration statement. And what it does is it identifies the states that accept the common form, the states that accept the common form, but you also have to fill out additional information, and then the states that don't require registration at all. So this is a really useful tool if you're looking at soliciting in a variety of states. And then, like I said, you can find this on the website, and from there you can identify, let's say you want to look at Alabama and what it takes to register in Alabama. You can click on the state of Alabama beneath this chart, and it will actually tell you what the requirements are for that state. So it's a wonderful tool. Turning to page 8, I now want to focus on internet solicitation, because internet solicitation has sort of changed the way the game is played. And in 2006, the Wall Street Journal reported that internet fraud is a main focus of the FBI. In fact, it's right behind Homeland Security. So it's a big issue, it's an ongoing issue, and it's happening every day. So the key question here is, are you doing business in these states that you have your website out at? You know, your website touches anywhere in the world. So in addition to your website just being out there and available, what else are you doing in any of these states, other states other than Georgia, where they may say you have contacts to that state? And the key is your contacts. So the big question is, how do federal and state courts and regulatory agencies obtain jurisdiction or control over you as a company if you're participating in online activities? What minimum contacts do you have to have with that state in addition to just having your website out there? Now, some states say it's just your website. And so to the extent that you may be getting donations from that state, for instance, Florida, you may need to actually put on your website, if you don't want to pay the $200 fee, that you will not accept donations from the state of Florida because you're not registered to do business in that state or to solicit funds in that state. But other states have sort of a sliding scale rule, and they look at how much activity you have in the state. Are you domiciled in the state? How involved are you in the state? Do you ever go there and physically solicit? Do you send email? Do you do telephone solicitation to those states? There's a whole variety of things, and different states have different things. Well, so because this has been such a wide range of opportunity, or different states look at things differently, in 2001, the National Association, and if you turn to slide 9, I'm on slide 9 now, the National Association of State Charity Officials put together what they call the Charleston Principles. The meeting was held in Charleston, and so that's why they call it Charleston Principles. But these are advisory guidelines for internet solicitation, and they're just guidelines and they're just principles. So no states have actually adopted these. But what they're good for is to help key you in to the types of things you need to be thinking about when you're doing solicitation over the internet, as to whether you actually need to think about registering in those states. Do you have sufficient contacts in the state? If you do, you have to register. If you have an office in the state or are domiciled in that state, you clearly have to register. If you're not domiciled, but you have other non-internet activities in that state, you need to register. So if you take a trip out to California and you ask for money from people in California, you need to register in California. If you do telephone solicitation to New York, then you probably need to register there. But you have to, what this does is this clues you into going and looking at that multistatefiling.org and what the requirements are of each state. And then what's nice is that if you have to do it in multiple states, you can fill out the multi-state form and maybe add an additional small form for some states and submit it. Of course, there's money associated with all of that too, so you need to take that into consideration. Let's talk about now website solicitation. The principles break it down into two different kinds of websites. One is interactive websites and the other is non-interactive websites. With an interactive website, that's one where there's the donate button and you press the button and you can put in your credit card or your PayPal account and donate. That's considered an interactive website. If you've got an interactive website, and this is where there's kind of pieces here, so try and follow along with this. Either you have one of two things. You're specifically targeting people that are physically located in that state, or you know or should have known that you were doing that, and I'll talk about that in a minute. Or you receive donations from that state on a repeated and ongoing basis, or a substantial donation. So if you have the interactive website and one of those two things, then you need to probably register with that state. And let me go through each of these. Specifically targeting people physically in a state. Well, email addresses do not have geographic information on it. It doesn't tell you that I live in Atlanta, Georgia on my email address. But if I have been to your site before, if I am a member, or if I've purchased anything, or if I've donated in the past, you likely have my address. And you have to compare those databases that you might have of the addresses of the person against their email addresses. And if you're sending email to those folks, if you're doing direct mail, you would obviously know. But if you're sending email to people in those states by the email addresses, you should have known that you were targeting someone in the state of North Carolina if you've got all their physical address information as well. And you have to cross-reference those. The other situation is where you receive ongoing and regular donations. Let's say there's 5 people in the state of North Carolina that just think your organization is the greatest thing. And so twice a year they give you $25. They could give you $10. That's ongoing regular donations. And you may, if you have an interactive website along with that, need to file in the state of North Carolina. Or if you get, let's say your budget is $100,000 and you get a $10,000 with your interactive website to have to file in the state. Now let's turn to non-interactive websites. And that's a website that basically is up there and just provides information. It's purely educational. It doesn't talk about donating. It doesn't do any of that. But if it does say, you can donate to us by by sending it to this address, then you're moving more towards that contact that's enough for you to have to register in the state. So if you have that, okay, you can mail us your donation at this address, and then on top of it, you're getting ongoing and regular donations or a substantial donation, then you might have to register in the state. The combination of those 3 things. So you really have to kind of walk through all the different steps and see what you're doing and what you're not doing. And in difficult economic times, the states really look at some of these issues and really do kind of focus on them. So you should take some time to look at your solicitation efforts. Turning now to page 10 of the presentation. There are some other areas of solicitation that you may participate in that the Charleston Principles also try to give some guidance to. And one is email solicitation. If you solicit via email and you know who it's going to, and this is sort of separate from your website, it's like doing it by phone or by direct mail, and that's considered having contact with that state and enough business activity in that state that you need to register. Internet solicitation, I want to make one other point, and that is the coventures. Let's go back to our Gap example. Let's say the Gap has a website, which we all know they do. Well, let's say they decide to sell those t-shirts that they're selling for you, that you're getting a part of the income from, on their website. Well, if people go from all over the 50 states and buy those t-shirts, then you need to register in all those 50 states because you're getting income from all those states. So you have to be very careful when you get into a coventure situation about whether it's worth it for them to put it on their website or not, because there's huge costs that can be associated with it. Now, there may be huge benefits, and you may make $1 million. So if that's the case, then it might be worth it to do it. But you really have to do the cost-benefit analysis to make sure it makes sense to do it. There are a few exceptions to internet solicitation and coventures, and whether you have to have a contract, and also whether you have to file with the state. If you just have an internet service provider who's just doing your online transactions, that's not enough to make you register in the state in which the internet service provider is located. If you just have administrative or support, technical service providers who do not solicit for you and are simply located in Kansas and providing that service, you don't have to register in the state. And then companies that don't receive any compensation based on funds raised, you also have that same situation where you don't have to register in that state. But overall, the key thing you need to take away is that while these are principles, they're not the law, and each state has its own law, and it's very murky, and you really need to do your homework. And that multistatefiling.org site is a wonderful site to start with. Okay, now if you'll turn to page 11, I'm going to change subjects a bit and turn to substantiation and acknowledgement. Everyone wants a receipt. No matter how much they give you, they want a receipt. But you don't have to give them one, but they do really want one. Especially people that provide you personal services and they can't get a receipt. So if, as a lawyer donates 5 hours of services and they charge $300 an hour, you cannot give them a receipt for $1,500 worth of services. Personal services are not deductible. And I want to get that out there right away because that's a big misconception. Now, if it's like a car wash that's a service, that's different. But, if you have 2 or 3 vehicles that you use that to transport, say, children as part of your organization, and you go to the local car wash and they give you free car washes, then that is a service that they're providing that is deductible. A donor cannot take a deduction without some kind of receipt. And that receipt has to state the name of the charity, the amount of the donation, and the date of the donation. Now, they can use their bank record, they can use a check, they can use anything that they have for their receipt. They don't actually have to have a receipt from the charity unless it's over $250 in cash or more. Then they need a contemporaneous written statement from the organization acknowledging the donation. Now, some organizations, particularly churches, will bundle all of the donations throughout the year and give one acknowledgement at the end of the year in writing. If you'll turn now to page 12, we're going to talk about what that acknowledgement needs to include. The acknowledgement needs to include the name of the charity, the amount of the cash contribution, or a description of the non-cash contribution, and then one of the following 3 things. A statement that no goods or services were provided by the charity to the donor, if that's the case, or a description and good faith estimate of the value of the goods or services that the charity did provide. So if the charity provides something, you have to give a description of that and a good faith estimate of the value of those goods or services provided. Or third, you have to state, if you're a religious organization, and most of you probably are not, but if you are, you have to state that you provided intangible religious services or religious benefits that there's no amount given for. The format of your acknowledgement, it can be almost anything. A letter, a postcard, a computer-generated form. If they're doing payroll deductions, like United Way and some other organizations have companies that do it through their payroll deduction on a payroll basis, they can actually use their W-2 form so long as it's under $250. But if it's over $250, then they need that written contemporaneous statement from the organization acknowledging the donation. You can provide your acknowledgement by paper or electronically. You can send an email with your thank you, we're acknowledging your donation. The key is that you have to make sure you send all of your acknowledgments by January 31st following the year in which the donation was made. So if your donation was in 2008, by January 31st of 2009, you had to send out all of your acknowledgments. A lot of organizations will just do it on a regular basis as the donations come in, because it's just easier to have a system where you immediately send out the acknowledgement and then you know it's done and you don't have to worry about it. And since most people like acknowledgments, even for the $25 donation, it's easier to just always send that donation, especially if you have an email address, because then it doesn't cost anything. Okay, if you'll turn now to page 13, we're going to continue talking about substantiation and acknowledgments. But there's an area, and this is where the devil is in the details, that people can get very confused about. And that is what's called quid pro quo donations. And that's where goods or services are provided in exchange for the donation. In this case, the rules change a bit. And if you have a donation of $75 or more, where the donor is getting something in return, then you have to have a written acknowledgement. And you have to have a description of the good faith estimate of what they're getting in your acknowledgement. So, and I'm going to go through some examples in a couple minutes. Also, the payment that they're giving, the donor has to give more than the value of what they're getting back. Otherwise, it's not a donation. Then they're just getting something. They're purchasing something. Let's talk about some examples. And I have here down on the slide dinners, concerts, other events. Let's take the first one. Let's say you have a dinner and the tickets are $50 for the dinner. But the dinner itself actually costs $25. Well then, technically it's a $50. You don't have to even put it on your ticket. But the easiest thing to do is to write on your ticket, the price of the ticket is $50. The value of the goods or services received is $25 for the dinner, and your tax-deductible donation is $25. Now, technically you don't have to do that because you're under the $75 limit, but who buys a ticket to a dinner and only buys one ticket? You usually go with someone. So if you're going with someone to a dinner, you're probably buying 2 tickets at $100, and now you've met the threshold. So it's easier to always have it on that ticket, no matter what the value is, or whatever the event is, have some kind of receipt that they can have that identifies the value of the goods or services. Let's take another example, and that is a ticket to a concert for $100. And the fair market value of that concert ticket is $40. So now you've got a $60 donation. Clearly you've met the $75 threshold initially for the $100 donation. And you need to identify that $60 is a donation and $40 is goods or services provided. Now, what about if somebody decides to give you a donation above and beyond the amount of the ticket price? So I decide to buy 2 concert tickets at $200, and then I want to give an additional donation of, say, $50. Well, now I'm at the $250 threshold, but I'm not getting $250 worth of value. So we don't have to worry about written contemporaneous, but we are still getting something back. So we're over $75. We need to have some kind of receipt. If I write a check for $250, I don't have a receipt that reflects that I gave $60 donation, a $60 donation, and then another $50 donation. because my ticket only says $60 for each of them. So what's recommended is you actually do a separate check for that $50, because that makes it easy, and then send a receipt, or they have their canceled check that they can use, or their bank statement or whatever that they can use for that $50. If they want to do it all in one, then you need to make sure you have some kind of receipt acknowledgement with you at the sale, so that of the ticket, so that you can give them an additional donation receipt for $50 if you don't want to mail it to them later. So things do get very complicated very quickly, and you really need to make sure you're dotting your I's and crossing your T's. There are a couple exceptions, and one is called the token exception. And I'm going to give you an example, and it's going to sound a little strange, but bear with me. If a charitable organization gives out a coffee mug with its logo on it, costing the organization less than $9.10, and the donor is given over $45.50, then it's what's called a low-cost article, and it's insubstantial, and you can ignore it, and you can just accept the donation for what it is. Now, where does the $9.10 and $45.50 come from, right? Well, that's actually set by the IRS on a yearly basis, and it's adjusted for inflation. And you can find that information, and these were the 2008 numbers. So for 2009, you can call the IRS exempt organization customer service number at 877-829-5500 for the annual adjustments for inflation. And I don't know that it adjusted much this year, but that tells you how much you can give in a low-cost article without having to include it as a good, is providing goods or services in return for a donation. There's also an exception for member benefits, and most of us probably don't have this issue, but let's say you're the aquarium and you provide discounted parking, or you provide discounted prices in their gift shop, or discounted tickets to visitors that come with you. Those sorts of things are not considered value or goods provided in exchange. So if the membership is $75, you get the full $75 donation. Okay, now let's turn to page 14, some other areas of donations that you may get that you also still need to acknowledge. For instance, unreimbursed expenses. Let's say you've gathered up all this clothing and you're sending it out to foster children throughout the metro Atlanta area. Well, if I am the person that's driving around for a week doing that, and I've spent, $200 in gas, I may just keep my receipt and simply acknowledge it on my tax return and not worry about it. But if it's over $250 that I'm taking as a donation of unreimbursed expenses, I need a written acknowledgement from the organization. So unreimbursed expenses is another area that you need to look out for. Finally, I want to mention the penalties for not meeting your written disclosure requirements. It's $10 per contribution, and not to exceed $5,000 per mailing or per fundraising event. So if you have a dinner and the ticket is $70, or you have a concert and the tickets are $100, and you don't have any evidence that it's $100 but the value of the service is $40, for every ticket that's sold, you can be charged $10 in fines up to $5,000. I want to just touch on very briefly donations of cars and automobiles, because this is a complex issue, and what I've included on the information at page 14 are the publications and forms that you need to complete and fill out if you're getting a car donated or a boat donated. The key here is that you recognize that it is not the Blue Book value that you accept, or as the amount or the value of the car. You have to look at the fair market value of the car, the price for which it would change hands. If you were to go out on Craigslist and sell this car, how much would you get for it? and that's the value of the donation. One other thing I want to mention too is that you never list the value of goods that you've received on your acknowledgement. So if you receive a couch, for instance, as a donation, you just want to list on your receipt that you're sending, your acknowledgement, that we received 1 couch from you. Because it's up to the donor to determine the value. But when it comes to something as big as a car, there's all kinds of rules, and you have to fill out all kinds of information to identify the value of that car. So it's a different situation. Okay, now I'd like to move on to page 15, which deals with corporate sponsorships. And some of you may be wondering, well, what does corporate sponsorship have to do with substantiation and substantiation and acknowledgments? Well, how you acknowledge your corporate sponsorship donation is important. And there's a lot of details there that can arise. The first thing to note is that there's a difference between what's called qualified sponsorship and advertising. A lot of corporations donate a significant amount of money, and you have to make sure you're not then advertising for them, because if you are, that's unrelated business income and you have to pay tax on that. So there was a lot of that going on a while back, and so the IRS actually came out with guidance as to what is qualified corporate sponsorships. And they define it that it's acknowledgement of a sponsor's name or logo. You can include their tagline, but you can't endorse any of their products. So for instance, let's say Coca-Cola has decided to donate $10,000 to you. You have to get permission from Coca-Cola to put their name or logo on your website or on any of your materials as a sponsor of your organization. And you can include, for instance, their tagline, the Coke side of life. But you couldn't say, Coke is the best soft drink in the world, be sure to buy it. And you couldn't put a link on your website that takes you to a place where you can buy Coke products online. Because that is advertising. Now, banners have been considered okay as long as they're not moving banners. For some reason, the IRS has decided that a moving banner is more likely to be advertised. So those are the sorts of things that you need to do to keep it a sponsorship. And you have to make sure that you're just acknowledging the sponsorship and not endorsing or promoting the products. The other piece of it is that they don't get a substantial return benefit from being a sponsor. So, because if you give them a substantial return benefit, then you're running into potential loss of exemption issues where you're giving a substantial private benefit to a company or a person. So it has to be an insubstantial value, which goes to 2% of the total sponsorship payment that they've given you. And we're going to go through a few examples of that in a few minutes. Well, if you'll turn now to page 16, I want to talk about how does this relate to these acknowledgments. Well, if you give a corporate sponsor something back, then you have to acknowledge that they've received goods or services from you. So not only does it have to be insubstantial, but you have to acknowledge it too on your acknowledgement receipt to them that they received goods or services. And what amount should be stated on that form when you're looking at insubstantial versus substantial amount. So now if you'll turn to page 17, we're going to go over a few examples. Let's start with example 1. A sponsor donates $10,000 and they receive 10 gala tickets and a banner on your website. Okay. If they give you $10,000, then at 2%, the insubstantial amount will be $200. So what they get back cannot be more than $200, or it's more than insubstantial. And you have to address that differently. Okay, so the tickets, 10 gala tickets at $50 each, you're looking at, but it's not just the overall price of the gala ticket. What they're really getting as a value is $20, which is the cost of the meal. So $20 at 100 ticket, or at 10 tickets, I'm sorry. $20 at 10 tickets is $200. So you're right at that insubstantial level. Well, now you've got to look at your banner. Do you normally have a banner? Do you normally charge for that banner? Is it normally advertising? If it's not significant, then you're right there and you're okay. and you don't have to list it on the corporate sponsor's donor acknowledgement. Let's look at the second example. A sponsor donates $2,500 and receives 200 free passes to the charity's facility. Okay, well, those facility passes normally cost $5, and they have received 200 passes. Well, that's $1,000. So that's more than an insubstantial value. So you have to identify that on your receipt. And really the donation is really only $1,500, not $2,500. Now there's a key here that you need to look into. And one of the reasons this is so important is when you're working with a corporate sponsor to give, you want to make sure you talk through all these issues so that everyone has a good understanding of what the rules are and how it's going to work. A lot of corporate sponsors aren't using some kind of charitable donation budget, but they're using their marketing budget. And they don't care about the value of that donation. So for them, it's getting their name out, it's marketing. And so if that's the case, then their donation receipt is irrelevant to them. And whether it's $1,500 or $2,500. So you need to have that discussion with them to figure out, where is this money coming from? Is it important that it be a donation or not? And then, because they could simply be purchasing those tickets, and they don't care because they're getting the benefit of being the $2,500 corporate sponsor. The third example involves a sponsor who donates $1,000 and receives a website link to the sponsor's products. Well, that's not a corporate sponsorship. That's advertising, and it's unrelated business income that you have to acknowledge on your return and pay tax on. So that's not a sponsorship at all, and you wouldn't give an acknowledgement for that. They have paid for a service in this case. So that's how corporate sponsorship works, and that's why it's important to actually talk through with your corporate sponsors how it's all going to be set up, and make sure your acknowledgement is what it needs to be, and that the benefit they're receiving is not more than insubstantial. Otherwise, you need to change the terms of the donation to make it work. If you turn to page 18, I've included a quick corporate sponsorship checklist. And this is just a series of questions that you can use to help you figure out whether or not it is actually a corporate sponsorship donation or what it may be, whether it's advertising or what have you. So hopefully you can use that, and that'll be beneficial to you. Turning now to page 19, I want to briefly talk about record keeping. Record keeping is critical to proving to a state of Georgia, any other state, or the IRS what you've been doing and how you've been doing it to ensure that you don't run into problems. You need to maintain a variety of records that we recommend, and these are just some recommendations. There may be others that you think of. But you should definitely keep a copy of all of your solicitation materials. If it's an email that's going out, print one out so that you have it in a file. You should keep a printout of your website page where you're soliciting donations. Any contracts with paid solicitors, coventures, solicitor agents, definitely keep a copy of that contract. For at least 3 years you should be keeping these things. And then also you should, any method that was used for tracking payments from those solicitors or fundraising counsel, mostly the solicitors, or coventures, how you track the payments of those monies that come to you ultimately, you need to keep those documents for at least 3 years. Also, your contracts with your coventures, you need to keep those for 3 years. In addition, any activities that involve quid pro quo donations, how the value of those goods or services were determined. So let's say you're having the gala event and they're getting a meal. How did you come up with the $25 as the value of the meal? You should have something in writing in your file that identifies how you determine that, whether it be the cost of the caterer per head or what have you. And it's always a good idea to have a copy of that ticket with your acknowledgement right in that file. You should also maintain a copy of your sponsorship packages. If you have different levels, and what you provide for the different levels, you should have an explanation as to the value of each of those goods or services that are being given back, and that it's insubstantial, and how you arrived at the values of those things. You should also maintain records of your donation acknowledgments. You can keep those online. You don't have to keep a written copy of each donation receipt, but you should have that backed up so that you have that information available for at least 3 years. Also, your charitable registration filings. Wherever you file, in whatever states, you should keep copies of those. And you should also maintain records of employees or volunteers who solicit donations for the organization. It's always a good idea to have a list of anyone who has solicited for you, whether it's as a volunteer, an employee, or otherwise, because it helps you to know and helps the government to identify that that person, yes, really was soliciting for us. We were aware of it, and so on. So those are just a few of the record-keeping recommendations that we do make, and there may be others, but you should have some kind of filing system for keeping track of all of that information. Lastly, if you'll turn to page 20 of the presentation, I want to briefly talk about Pro Bono Partnership of Atlanta and what we do. Now, a lot of you are our clients, and you already know, but for those of you that don't, we provide free legal assistance to nonprofit organizations in the Metro Atlanta area. To be eligible, the organization has to have its 501c3 status and be a nonprofit organization. You have to be primarily serving the poor, the disadvantaged, and you have to be unable to pay for legal services without significantly impairing your ability to do your mission or to complete your mission. So if that's the case, and you need legal services, please be sure to contact us at our website, pbpatl.org, and we have what we call our request for legal assistance form that you can fill out, and then we can see if we can assist your organization with charitable solicitation or any other issues that you may have. So with that, I'd like to...
Got one question.
We've got a question?
And we were floating around this question. Actually, you may have answered it, but I'm paying attention to the tech. Do sponsorships count against the value of the dinner event ticket? That is, sponsorships defray total ticket cost for guests, but auditors like to say they are general contributions.
They are general contributions so long as there's an insubstantial value that they're getting in return. So in the case that I gave you where the $10,000 donation and the value of the gala ticket dinners, which is what they were receiving back, was just the value of the dinner for the ticket. You only have to look at the value that they were receiving back. In that case, it was $200, which was below the threshold of $200 to be insubstantial. In that case, you don't need to recognize that amount at all. And so hopefully that answers the question. But like I said, this gets very complicated very quickly. So there's a lot of things to look at. And that checklist really should help you think through those various different issues. And of course, we're available at Pro Bono Partnership if you have further questions. Or if there's question now.
Got it. Does registration apply for foundations based in other states as well?
Yes, absolutely. If you're based in another state, you may have to register in the state in which you're located. And then if you're registered as a foreign corporation in Georgia, and you meet the Georgia thresholds, then you would have to file in the state of Georgia. If you've registered as a foreign corporation in Georgia, you certainly would have to file if you're soliciting donations in the state of Georgia and you're over that $25,000 2-year threshold. If you are not registered as a foreign corporation in the state, but maybe only getting email, only getting occasional donations, then you got to go and look at the specific state rules for Georgia. That multistatefiling.org website is very helpful for that. Any other questions? Well, with that, I thank you, and I hope it's been useful to you, and we'll look forward to seeing you at the next webinar.